Welcome, everybody. I'm Jeff Hull. I'm an astronomer and the director of Lowell Observatory here in Flagstaff. And this is the second part of our two-part webinar series on planned giving. So thanks for joining us. First of all, we're going to plan to go about 30 minutes today, and then we'll have some Q&A. This series is being brought to you by the Lowell Observatory Foundation, which is the support organization that holds and manages our endowed funds. And while we've got some good information for you today, I think you'll be hearing some good advice from some of our development team. As always, when you make your estate plans, be sure to consult with an attorney and a financial professional to make sure all the I's are accurately dotted. Now, if you joined us last week, you heard all about estate gifts and the different ways you can make a gift as a planned gift through your estate. Today, we're going to hear about two other types of mechanisms by which you can make a charitable planned gift to Lowell or any charity of your choice. And the first of those will be life insurance policies and how that can be used as a mechanism for planned giving. And then we will hear about retirement accounts, whether that's an IRA, a 401k, or whatever it might be. And so to illustrate and discuss those two things for you, I have two members of our development team here today. First of all, to talk to you about life insurance, we have Bruce Kosaveach, who is our philanthropy manager. Bruce has been with us for about 4 years now, came to us after retiring from GE Capital, and he's been a major positive addition to the development effort here at the observatory. And then on the retirement side, you'll hear from Lisa Actor, our Deputy Director for Development. Lisa's been here since 2015 after coming to us from her position as Director of Development at Westminster College in Salt Lake, and even farther back before then as a marine biologist. So she's this perfect combination of science and fundraising that's been tremendously effective and positive for the observatory. So two great colleagues here that I'm pleased to introduce, and we'll get right on with the first presentation right now. So let me, we'll socially distance Bruce into the screen here as we breathe pestilence all over each other. So Bruce is here to start things talking to us about life insurance, and we'll let you take it away.
Thank you, Jeff. Appreciate that. So just to set the stage and before we get started, we will not be providing financial advice, as Jeff mentioned. We're not financial advisors. I don't even play one on TV, but our goal is to give you perhaps, hopefully, some ideas and questions that you can ask of your professional financial advisor to get those types of answers, because that's what they do on a daily basis for a living. And so our focus then for these planned giving webinars is on you, the donor. We want to perhaps give you some vehicles and methods for giving through an organization like Lowell in order to meet your philanthropic goals and hopefully leave a lasting legacy. So that being said, life insurance is what I'm going to be talking about, and just the mention of the word life insurance, those two words usually gets people's eyes to kind of glaze over and they want to change the subject. It's not a real popular topic. In fact, it's even been said that needing life insurance is like needing a parachute. If it isn't there the first time, chances are you probably won't be needing it again. But that being said, it is a very viable way to gift to nonprofits. So let's get into it. I'll be talking about three different areas. I'll be talking about what life insurance can do. I'll be talking about why use it as a charitable giving instrument. And lastly, I've come up with 3 ways to gift life insurance for your consideration. So I think everybody's definition of what life insurance can do is pretty much the same. It's the ultimate definition of when you pass, you are providing a cushion for your heirs and your loved ones to hopefully avoid financial hardship. And so that's something that everybody knows about life insurance. It should be a part of your estate planning. However, I can't think of a time when a life insurance policy is not really needed. Even if you've already paid for a life insurance policy, even if it's been maybe replaced by a retirement account or something like that, there's always a way that that life insurance policy can be used. So we'll get into that here in a minute. And lastly, it provides a simple and easy way to make a lasting legacy for an organization that you care deeply about. So why use it then as a charitable gift instrument? Well, first of all, it uses an asset that you probably already own. So you already have it, It's there for your use, and it's easy to use. Again, as I mentioned, it's a simple, easy way, and affordable way for you to make a larger gift to a nonprofit, perhaps larger than what you might be able to give through a retirement account after taxes. And it also avoids probate and some other things. So it's a good deal. Lastly, it can be used as a wealth replacement mechanism, which I'm going to be going into that a little bit more in detail in a minute. So ways to gift. There is, the best way is if you have an insurance policy already existing, just use that policy. All you have to do then is contact your insurance company, request a beneficiary change, or do it online, your choice. And put the nonprofit as a beneficiary for either a part of the policy or all of the policy, obviously your choice. Fill that out, send it in, the insurance company files it, done. No need for a lawyer. It's a very simple way to do it. And just as a sideline, I wanted to mention that the beneficiary that you put on that policy and so on usually supersedes a will or a trust that you have. So that's something to keep in mind. Jeff, I wanted to ask you to give an example. We have a donor here at Lowell that has done this anyway with an existing policy. And so it's always good to have a real life example for illustrating a story. So Jeff?
Great, thanks, Bruce. Last week we did cover some specific examples of how estate gifts have played out at the observatory, sometimes very smoothly, sometimes with a couple of bumps in the road. But we do have a donor who has specified part of a life insurance policy with Lowell as the beneficiary. And who might that be, Bruce?
I don't know,
I can't imagine, but no, this is a good chance for me to say thank you, because it's our very own Bruce Kosaveach, who has, this is basically the simplest way to do it. You have a life insurance policy and it has a beneficiary, and you can specify all or part of that to a different beneficiary. And Bruce has simply given a percentage of that, specified that a percentage of that will go to the observatory. And moreover, you can also not only specify the recipient, but where you want that to go. And so in Bruce's case, there's a particular fund within the Lowell Observatory Foundation that matches the kind of mission activities here at the observatory that he would like to support. So you just specify that, and then when the time comes, we make sure that the money goes exactly where you indicated it should go. So on behalf of all of us, thank you very much for that sterling example.
My pleasure, Jeff. Thank you. I'll just also add too that if you want to use this as a possible way to gift, and you want to use the premiums that you pay for an insurance policy as a tax deductible gift, if you will, for tax deduction, there's one thing that has to happen. And that is that the nonprofit has to be the 100% sole owner of that life insurance policy. And it's what we call an irrevocable beneficiary. And so in that regard, then you as the premium payer can take those premiums as a tax deduction. If you only take a portion, like for instance myself, I've taken a portion of my policy to give to Lowell, I am not able to give any premiums as a tax deduction. So just to let you know. And another way that you can use as a gift, and that is if you don't already own an insurance policy, you can go out and you can purchase one. Gift for a nonprofit. And again, the nonprofit then has to be the sole owner of that policy in order for you to take any kind of tax deduction for the premiums if that's what you want to do. Insurance companies are very much used to this. They have programs available for sole purposes of insurance policies as a gift. And you can create a large deferred gift for a modest premium depending on your age or insurability. So something to consider. Again, we have a donor at Lowell that has done this exact same thing. So again, to have a real life example is the best way to illustrate a story. So,
yep.
Jeff?
So we have a longtime donor, a supporter of the observatory, who's done exactly what Bruce talked about. This is an entirely new policy, so not a policy that the donor previously had and was redirecting in any way. This is a new policy in which the observatory is named as the sole beneficiary. And then it's a very simple mechanism whereby each year or however often it is, we get the premium payment. And since we as a 501c3 are the sole beneficiary, the donor gets the premiums as a write-off, and we don't assume the financial burden of having to pay the premiums. And it's really a nice mechanism for donors that might want to make a major contribution to an organization, but it's beyond your immediate means to do so in terms of one big cash chunk. This is a way to essentially, it's almost like being an ongoing member of the observatory. We have a large membership program where people pay $60, $100, $200, whatever it is per year. Of course, higher levels are available too, in an ongoing way. And this is the same kind of thing, except then at the end, there's a very nice corpus in there that will come into the foundation. Either it could be unrestricted, or as with Bruce's policy, if you want it to go to support science or outreach or whatever it is, you just write that into the statement, and that's where it'll go. So another great way to go about this that's definitely worth considering.
Thank you, Jeff. And Lisa Actor, who is our Deputy Director for Development here at Lowell Observatory, also has an example of the use of a life insurance policy in a little bit different way. So it'd be great to share that story. Lisa?
This gift came about because the executive committee of our advisory board all agreed that they were going to make a planned gift to the observatory. And this individual on the advisory board was thinking, how can I go about this? When he remembered that he had a whole life insurance policy that was created by his parents when he was a little boy. And that whole life insurance policy has grown and grown and grown over the years. And he became a successful adult, and he has other insurance, and he really doesn't need that policy, nor does his family. So he was able to actually gift that policy from himself to the Lowell Observatory Foundation. And this is an individual who believes in supporting students and postdocs and pre-docs and undergraduates who come here and learn how to do research at Lowell Observatory. And so he created a new fund in the foundation with this gift. And we were able to take this insurance policy. Once we owned it, we could cash it out, put the cash into the foundation, and it created a very nice fund. And it was a nice gift, and it was using an old insurance policy that really wasn't needed anymore.
Great.
So
Thank you. Thanks, Lisa. So the number 3 way that I've had as an example to gift was given to us as a suggestion from a donor, one of our donors here at Lowell, who is in that business. And they gave us this suggestion. I think it's a very cool way to do something, and perhaps one that you hadn't thought of, and so I wanted to bring it up. Just to back up a minute, here earlier in 2020, Congress passed the CARES Act. And the CARES Act had a couple of things that changed a little things, and one had to do with RMD payments, the required minimum distribution payments. It actually took the age at which you were supposed to give that RMD payment and raised it from 70 and a half up to 72 years of age. Here in 2020, there's been given a holiday, so you really don't have to pay anything if you don't want to. But at the same time, what this suggestion had to do with was, as long as you're taking out an RMD from your IRA, your 401k, whatever that might be, take that money and use it as a premium payment to buy a life insurance policy for your family, for your heirs. And at the same time then, change the beneficiary of an IRA or your 401k or one of your retirement accounts, either for the full amount or a portion, whatever you want, change that beneficiary to the nonprofit. So when the time comes, you are basically then bequeathing that asset, that insurance policy, to your family. They acquire a life insurance policy, which is perhaps more than what they would have acquired with a retirement account after taxes. And at the same time, since the nonprofit does not pay taxes, it is not paying taxes on whatever the beneficiary amount that you gave to them through your IRA or your 401k. So they're not paying income tax, inheritance tax, or anything like that as to what you may have paid as a person, as part of the family. So in this case, the charity or the nonprofit thanks you very much for that generous bequest. Your family thanks you very much for that life insurance policy, and it's a win-win. This is called wealth replacement. And wealth replacement is basically replacing the wealth that would have come to you through a retirement account at your death. and it's replacing it with a life insurance policy. So just to kind of summarize, insurance provides then an easy and cost-effective way to not only insure your heirs and your family and cover them at your death, but also it provides a very easy and simple way to make a lasting legacy for a nonprofit or a philanthropic organization that you care deeply about. So it's a twofer, and all parties benefit, mutually beneficial, as they say. So a couple things to keep in mind. We'd like to ask that if you could inform whatever nonprofit is that you have gifted, bequest, or life insurance, whatever it may be, if you can inform them of the executor contact for that gift. It could be a family member, it could be an attorney, whoever it may be, but that nonprofit would need to know who that person is. So when the time comes, we have it on file, they have it on file, and it just makes things a lot easier. At the same time then, if you could please inform the nonprofit about where you want that gift to be used. If we get a gift from someone and it's unrestricted, we don't know exactly where that money wanted to be used or where the person wanted the gift to be used. So please tell us. At Lowell, we have what we call a letter of intent that you fill out, and it literally puts all kinds of information, but part of which is where you intend that gift to be used, as Jeff mentioned earlier. And it also has a place for the executor contact. Now, if you're giving to Lowell, there's 3 different ways that you can give. One is to the Lowell Observatory itself. The observatory, in a case like this, would be used, that gift would be used for day-to-day operations, maintenance, activities, etc., and it would be spent in its entirety. So that would be a wonderful gift, and we would sincerely appreciate it. Another way would be through the Lowell Observatory Foundation. This was established back in 2015 as a way to sustain Lowell through many years into the future. And it also has within the foundation a number of endowment funds. Each of those funds has a different mission, a different kind of a focus, and you can look them up on the foundation website so that maybe if you have an interest in a certain area and you want to gift something to an endowment fund, that is where you can give it specifically. Just keep in mind, the money that you give is called the corpus. That corpus will never be spent. The only thing that is done then with your money is it's professionally invested and managed. And so what happens is that the interest that comes off of that endowment fund is what is spent. Lastly, if you could please, I'm sorry, there's one other way that just recently came out. Lowell Putnam, who is our sole trustee, recently switched the Lowell Trust into a 501c3, which is basically makes it contributable, tax deductible, etc. And this is the same Percival Lowell Trust that was established back in 1916 when Percival Lowell passed away and has sustained the observatory all these years. So it's now available as a way that you can gift if you so desire. Lastly, if you have given us a gift, an estate gift to Lowell, and you haven't let us know about it, it would be great if you could just inform us that you've done this for a number of reasons. Number one, the most obvious is that we can generously thank you for your gift. And number two, so that we can have that information on file for future reference. It really, really helps in the future. So for more information about this type of thing for life insurance, please contact the professionals, the financial advisor that you have, or insurance agent or attorney or whoever that can give you that professional advice. But if you still have questions about Lowell Observatory and this type of thing, Lisa Actor, who is our Deputy Director for Development here at Lowell, Stephen Riggs, who is our Development Manager, or myself, who's the Philanthropy Manager here at Lowell, will be happy to take your question. Last but not least, we have available a brochure that is free of charge to you. And I don't know if you can see this, but this is from our Lowell Observatory Foundation website as an estate planning guide. And all you have to do is go online on that website, request it. We'll be happy to pop this in the mail to you. Inside is a whole menu of options of estate planning, from bequest language to financial information. And even if you have a will or a trust, it might be a good idea to look at this and maybe get some ideas that you hadn't thought of. So please, request this if you want to. We'd be happy to send it. So as I say, that's my story, and I'm sticking to it. I hope you've gotten something out of it and maybe generated some questions. We are going to hold questions. If you have put any questions in, we're going to hold it until after Lisa has done her presentation, and then we'll tackle all the questions in total. So at this point, I'll turn it over to Lisa Actor.
Thank you, Bruce. Appreciate it. I'm going to talk about giving through your retirement account. And I wanted to first say I'm not a financial advisor. I'm not an attorney. So as Bruce said, be sure and consult your advisors as you think about doing these things. We're going to talk about how the experiences we've had with donors who have done these kind of gifts, and sometimes that we ourselves have implemented. We all save our entire working career for retirement. We put money in every month, every paycheck. Our employer often matches what we put in, and those dollars accumulate. And I don't know about you all, but it's my fervent hope that I'll live a really long life and I'll be able to use every penny. In fact, ideally, I might take a wonderful trip, spend the rest of the money, and say goodbye. And that money has been served me for my whole life. The problem is none of us know how long we have and what our needs are going to be. So we're all pretty tentative about drawing down a lot of that money. And often, as we all know, people pass without spending it all. So what happens to those pre-tax, hard-won, saved dollars after someone passes away and hasn't used all of their life insurance? Their IRA in the retirement account. That's what I'm going to talk about today. You have some choices for your money, and we're going to talk about that. So I want you to know that this presentation is brought to you, as Bruce has said, by the Lowell Observatory Foundation. The foundation has 9 trustees. It's an independent nonprofit, and those 9 trustees are currently managing a little over $8 million. Our goal is to get it to above 20 million, which will help support this observatory in perpetuity. If you want to look up the foundation website, it's foundation.lowell.edu. So, why would you donate part of your retirement account or all of it? And how do you go about it? When you set up a retirement account, there's a form you have to fill out that indicates your primary beneficiary and your secondary beneficiaries. Generally, if you're married, your spouse is your primary beneficiary. And all those assets, generally we want to flow to our spouse. But what if we both go at the same time? Or what if you pass away and then your spouse passes away? Those secondary beneficiaries are generally where people stop and think about their kids, their grandkids, their nieces, nephews, and nonprofit organizations. And so there are plenty of ways that you can benefit others through that by designating them in as your beneficiary. Why would you do it? Well, those assets help other people, whether you give them to your family or you make a commitment to a nonprofit. Your legacy, your hard saved cash actually will make a difference in the world. If you give the funding to a nonprofit like the Lowell Observatory Foundation, the assets flow 100% tax-free because we're a tax-free or nonprofit organization. If you were to leave the funds to your heirs or an individual, because the assets went in and grew tax-free, they would have to pay income tax on those assets. That's why this idea that Bruce recommended of potentially buying life insurance for those folks and then gifting those dollars to a nonprofit could make a lot of sense. So one of the things about gifting IRAs and retirement accounts is it's really easy to do. Like insurance, you go online or you contact the finance company that's managing your assets and you get a beneficiary form and you change the beneficiary on that form. Often you have to sign it, get it notarized. I'm sure all those details will be on the form when you get it, but it's very easy to do. You don't have to consult an attorney or an accountant to do that. I wanted to tell you how my husband and I have left gifts to nonprofits through our retirement accounts. We updated our trusts a few years ago, and as we thought about it, and we have 2 sons, we want to make sure we leave something for our sons, but we raised them, we educated them, they're doing great. They don't need 100% of our assets. So we decided that a certain percentage of our assets would go to some nonprofits that we care about. One of them is Lowell Observatory. We each went to our retirement account manager and got the beneficiary form and changed it so that our secondary beneficiaries now include several nonprofits that we care about. For me, I committed mine to the Lowell Observatory Foundation, and I put it in that same fund that I told you about was set up by an individual's life insurance to help students come here and do research here as interns and pre-docs and postdocs, because I had that experience as a student. That's meaningful to me, and I wanted to help other students. As Bruce mentioned, often a charitable gift is helping others through another organization. So my gift will help future students through Lowell Observatory to become professional scientists. And it was really easy to do. So I have just a few warnings of things not to forget as you go through this process if you choose to leave part of your retirement account to a nonprofit organization. This is a really big one. If you say through your will or trust that you want to leave your retirement account to an individual or a nonprofit, that will not supersede the beneficiary form that's been filed with the finance firm. And I learned this lesson when I was working at Westminster College. We had an alumnus who discovered that he had a terminal illness, and he got into his financial planning and his estate planning a lot more deeply. He had originally left everything to a brother, but he had had a falling out with that brother some years before. He contacted us and he wanted to leave his retirement account, which is where most of his assets were, to the college. So when he passed away, we found out that he had made that designation in his will and had not changed the beneficiary line of his retirement account. And what happened was all of those funds went to his brother, who he had originally indicated as the beneficiary of his retirement account. So it was not a happy story for the college or for the gentleman who passed away. So just a heads up that to remember that detail. If you have a purpose for the gift, say you want to give that gift to a particular fund in the foundation or a particular purpose at Lowell Observatory, you can actually say that on most beneficiary documents. So you could say to Lowell Observatory Foundation for the Inspiration Fund or for the Exploration Fund. And then when that gift comes to us, the check will come and it will have that designation on it and we'll know exactly what to do with it. In addition, it's very important to let the nonprofit know of your intentions and of your gift. So they will expect it and know ahead of time what you want done with the gift. And I'm going to tell you the same things that Bruce did. If you're going to donate any part of your retirement account, consult your financial advisor. You can visit we have a website within the foundation website that specifically gives advice on leaving legacy gifts. It's lowell.giftlegacy.com. And there's a lot of information there. Or you can contact one of us. I'm Lisa Actor. I'm the Deputy Director. Stephen Riggs is our Development Manager, and Bruce Kosaveach is our Philanthropy Manager. And any of us can help you and would be happy to answer your questions. So in closing my part, again, we have this wills guide, this planning guide that's available. We're happy to send it to you. Just let us know you'd like it. And I think it's time for questions.
Yeah, now what we'll do is switch over to some Q&A. I'll call up the Q&A boxes here and see if we've got some questions that have come in. And then we'll have some concluding remarks. Yeah, it looks like there's one. Okay, yes, question from Robert Filler. Hi, Bob. Can a variable annuity be gifted all or in part? And if so, please explain. Who would like to take that?
I can talk about
Okay, Lisa? All right. I'm going to get out of the way.
I'm not actually knowledgeable specifically about variable annuities, but I know we can receive annuities. I mean, annuities have beneficiary forms too. And in fact, we recently received a very nice annuity that's going to help us redo our website and create a new website. So yes, give us a call, Bob, and we can talk about it. Thank you.
Okay, thanks, Lisa. At the moment, there are no open questions. We'll wait just a minute to see if anybody else would like to type in a question or two, and then we will wrap up. And in case you're wondering, if you weren't with us last week, we're broadcasting to you today. You may recognize it if you've been up here. This is the observing deck of the Giovanni Open Deck Observatory. It's our fabulous new observing plaza. In fact, one of the telescopes here all the telescopes were gifted by generous donors, but one of them in particular by a donor who left us nearly his entire estate, and that was one of our examples from last week. So at the moment, I'm not seeing any further questions, so I'll say thank you very much for joining us. And we really appreciate your taking your time to join us for this week's webinar, and I know some of you were also here last week. If you were here last week, I was saying it's always a tremendous honor for me to have a chance to talk with donors about planned gifts. And as I mentioned, I had a chance to meet with the gentleman who gave us this telescope last summer, shortly before he died, and just discuss his estate wishes and assure him that his money would end up in the foundation as he wished. Really, I think all of us here would consider a planned gift to be the ultimate philanthropic gesture. It's a tremendous vote of confidence in the organization that you're making the gift to. And we truly appreciate that confidence and trust that anyone shows in any charitable organization. And I would hope, like any organization, we will do our best, whatever method you use to give a charitable gift to Lowell Observatory, to make sure that it's delivered in exact accord with your wishes and to be the best possible stewards we can of your lifetime legacy. So thank you very much for joining us, and thank you for your generous support of whomever is going to be the steward of your everlasting legacy. So with that, be well, be safe. From all of us at Lowell Observatory, we wish you good health and a very happy life. Thank you for joining us, and hope you can come back and see us on site soon.